Hello and welcome to today's daily education here at Forex.Academy. I am, of course, your host, Robert Blackwell, and I have the pleasure today to walk you through today's daily education. Let us consult the following disclaimer. Of course, there is risk inherent when trading in the financial markets. And the content of today's particular webinar, we're going to be discussing trading the US dollar. Now, why is it so important to understand and trade the US dollar in terms of our focus on the Forex markets? Well, of course, because it is one of the main currency pairs that actually pegs itself to a range of other currency pairs that we can trade, of course. So a lot of the majors are obviously pegged and linked to the US dollar, and that provides us with a lot of opportunity in understanding one leg or one side to that currency respectively. So let us delve into the trading platform, and one of the main reasons why we've chosen to discuss trading the US dollar today with today's daily education is because we're at kind of an inflection point. Here we have up on screen the US dollar index. Okay, what we can see is if I zoom out on the price action, we have experienced a very long-term downtrend in this market. Okay, this market has traded down for the whole of 2017. In terms of Forex commentary, we call that a long-term depreciation in the currency pair. So just note this on the actual trading chart. You can see highs in the dollar index of around 103, and the dollar trades down to lows, of course, seeing a few bounces along the way. Trades down to lows there, and relative lows of around 88, just touching 87.80 there as well. So we've seen a long-term depreciation in the US dollar during 2017 and moving on just to the start of 2018. Now what we've seen now more relatively in the last 3 months, February, moving on from February, of course, to the current price action, is a very strong bounce in the US dollar. And we can see this by observing the US dollar index. So what we can do is zoom in. Again, to define the US dollar index, it's a basket. Okay, it's a basket of other currencies weighted against the US dollar. A large portion of this weighting is, of course, the euro, and you often see a reflective change in appreciation or currency depreciation in the euro dollar as a result of how the dollar index trades and vice versa, of course. So this is, of course, the last, I suppose, short-term sell-off we've seen in the dollar index here to the downside. Again, we are relatively seeing this price action here around January time, so sort of the turn of 2018 with a bit of a bottom in this market, and we touched it several times. Right now, at this moment of time, of course, we have a very strong bounce in the US dollar. So we're at a kind of inflection point here where we're asking ourselves, well, is this something stronger than a bounce in the US dollar in terms of the long-term perspective of dollar strength? Of course, what we're seeing is US interest rates starting to increase, or a forward pacing of interest rate increases. And that is one main context to currency appreciation, guys, okay? How an interest rate increase or several interest rate increases over the long term can effectively appreciate the currency of that domestic country. Now, why is that the case? Well, simply put, it's because levels of interest, of course, offer return on investment. So for those dollar denominated investments, of course, other market participants, the investment community, will see them as more attractive. They will create, obviously, demand for dollar instruments, and of course that demand itself as a function creates foreign transactions where you literally change your euros or your Japanese yen or whatever you're trading, of course, to US dollars so that you can buy or purchase that investment. So interest rates are very important when pricing currencies, and that's what we're seeing over the long term as the US is leading the way, I suppose, for interest rate changes. Now, that is on the fundamental side. At this moment in time, we are at a very technical standing point, I suppose, an inflection point, where we are asking ourselves, well, what is going to happen in the long-term perspective of the US dollar? So I have discussed, obviously, the level of interest rate changes in the US as a function of appreciation. One main point, and you could argue which causes US dollar depreciation, is the huge trade deficit it has with across the world. More focused, of course, in terms of the news flow we've seen over the past year. It has a huge trade deficit with one of its largest trading partners, China. Now, that huge trade deficit effectively leads to domestic currency depreciation, because there's actually more money going out to other, for business in other countries, and it's actually going in, dollar flows going into the US. So what we see now is an inflection point when we are seeing some sell-off here. We're asking ourselves, well, is this simply just a bounce in the US dollar from the long-term decline as we've seen, or is it something a little deeper? We can see the dollar trade up to the upside. If that is the case, we must observe this market with full objectivity, okay, as technical analysts, to see this market trade to the downside. Again, that may be its objective, of course. But listen out for the news flow, guys, because we have seen a very strong dollar bounce in the last 3 weeks. If I move this on to weekly price action, it's more or less the last 2 to 3 weeks we've seen a very sharp bounce in the US dollar. But again, the long-term trend in this market is to the downside. So be completely objective in your trading, even though the dollar is showing some strength right now, and argue, well, we've seen quite a bounce from these levels here. Are we simply seeing the same again? And this weekly candlestick today, we are on Friday, of course, would suggest to us, well, something might be looking to push this market to the downside, of course. So again, that might be a long-term trade perspective you might have, of course, but try and feed into the overall dollar story. Of course, it is overall a weak currency, even though we see that as a safe haven currency, the US dollar. Financial markets now look more forward to the Japanese yen as a barometer of risk in these financial markets. So do be aware of that. That is not supportive, of course, of dollar strength. And again, always judge the technical setup of the market in question with your fundamental analysis, because trading the dollar, as I suggested, of course, and certainly when you become more experienced and have more wisdom to how the dollar moves, that will not only allow you to trade the dollar index, guys, it will allow you to trade many of these various assets that we have here in terms of dollar pairs. So we have, of course, the dollar index here in front. We can trade the euro dollar as an inflection. I'll move it into the daily price action so we can see the downtrend. Then we can trade the cable market, which is dollar pound or dollar sterling. Then we can trade, of course, dollar Swiss, very strong trend to the upside. Again, that is technically significant, guys. We have touched parity there, and now we're seeing a reversal from such a figure, of course, parity to the Swiss franc. So you can trade with opportunity across these different dollar pairs, guys, and gaining more wisdom and more experience to how the dollar appreciates or depreciates will make you a much better Forex trader, okay? So that, of course, finishes today's daily education discussing trading the US dollar. Thank you very much for joining us. We'll see you next time. Bye for now.